Hello everybody, welcome back to our SSCMA classes. So we are going to resume our direct taxation classes for CA and CMA final. Okay, so our today's topic is section 94B, deduction of interest under section 94B. Okay, so we'll understand this with help of what is written in law and with the help of example. Okay, so let's go guys. The law is saying that if an Indian company being the borrower incur any expenditure by way of interest in respect of any debt issued by non-residents, which is associate enterprise, okay, and such interest exceed 1 crore, then the interest paid or payable by such Indian company in excess of 30%, okay, would be disallowance. Okay, I have just read it till here 30%, in excess of 30%, that's it. Okay, let's go to the example. Okay, X Limited is an Indian company. Let's understand with the example according to law. Okay, so X Limited is an Indian company. Okay, Indian company, if Indian company borrows, okay, and incur an expenditure by way of interest. Here X Limited borrows loan, have taken loan or have taken any borrowing from his associate enterprise who is non-resident, of course. So XY Limited is a non-resident and he is associate enterprise. Okay, and here XY Limited have given loan to whom? X Limited, to his associate enterprise. Okay, loan is given by whom? XY to X Limited. Okay, and what is X going to pay here? Interest. In back he is going to pay interest here. Okay, so the law is saying that, stating that the excess interest would be disallowed. Okay, the excess interest would be disallowed. Let's read it again. Okay, so if an Indian company who is X Limited, okay, being the borrower incurred any expenditure by way of interest in respect of any debt which is loan, okay, issued by non-residents XY Limited, okay, who is associate enterprise, and shall such interest exceed 1 crore. This is also one more point, that the interest payable is more than 1 crore, which is more than 1 crore. Okay, then the interest paid or payable by such Indian company, who is this X Limited, okay, interest paid or payable by such Indian company in excess of 30% of, now here comes the thing of what, 30% of what, right, 30% of E, B, D, I, T, A. Okay, let's read it now. Earning before interest, tax, depreciation and amortization, EBITDA. We can write it like EBITDA. Okay, EBITDA, which means earning before interest, tax, depreciation and amortization, or interest paid. So up to this, let me explain it again. In the example, X Limited have taken loan from its associate enterprise, who is associate enterprise here, XY Limited is associate enterprise in the example. Okay, and so XY have given loan and X is going to repay interest amount. So if the interest amount paid is more than 1 crore rupees, okay, and which means here the interest would be disallowance. Okay, 30% of excess of interest is going to be disallowed. But what is this 30% of excess interest here? Okay, first of all, they are talking about 30% of EBITDA, interest before, earning before interest, tax, depreciation and amortization. Okay, or there is one more option, or interest paid or payable to associate enterprise, whichever is lower shall be allowed as deduction as per, shall not be, which means this is going to be disallowed on section 94B. Is this part clear? Okay, or this interest is in similar nature expenses paid like guarantee or commission. Okay, in this case, if interest could be replaced in case of guarantee and commission. Okay, expenditure could be in any form, etc. So this was the one condition where associate enterprise have given some loan amount, given loan or borrowing to one of its associate enterprise, and the first party is repaying the interest. Okay, and that interest amount is more than 1 crore rupees, then the excess interest EBITDA, excess of this or interest paid or payable would lower among them would be disallowed. Okay, and the second condition which says that further whether the debt is issued by lender. Now in the first condition, the associate enterprise was giving loan to its associate enterprise, right? Okay, non-resident was giving loan to its associate enterprise. Okay, but in second case, the loan is taken by some other person. Okay, which is saying that the further the debt is issued by lender which is not associate enterprise. But here in this condition says that the associate enterprise either provide implicit or explicit guarantee. Okay, there is again second thing written in this part, in this para. So let me specify things up to this, up to guarantee. First of all, the loan is taken by some other person, other lender. Okay, and the guarantee is given by whom? The non-resident associate enterprise. Okay, let me tell you, like for example, let's take XY. The loan is taken by AB Limited. Okay, and the guarantee is given by XY Limited. Is it clear now? Okay, guarantee is given by XY Limited. So in this was the second condition, first point. Okay, let's go for the second point which says that or deposit of corresponding and matching amount of fund with lender is deposited. Okay, or the same amount of borrowing or some other which is matching up to that deposit, have that amount is to be deposited with the lender. Okay, this was the second paragraph, second point. Okay, such debt shall be deemed to be have been issued by associate enterprise. In this case, we would assume that the debt shall be deemed as which is to be given issued by associate enterprise. Okay, limitation of interest would be applicable. Now the thing comes like, what is this interest, excess interest now? How I am going to calculate this excess interest now? Okay, let's go for this, the calculation of excess of interest, where we are going to take the total interest which is payable by the associate enterprise to the non-resident associate enterprise. Okay, which is to be less by EBITDA, earning before interest, tax, depreciation and amortization, or the second part, interest paid to associate enterprise, whichever is lower. Okay, whichever is lower. Disallowance for this year and can be carried for next year, which law is saying that the interest 30% of excess interest is disallowed in this year. Okay, but it could also be carried forward for further 8 years. Is it clear, everybody? So let's go for one question. Okay, let's understand what is this law, this section saying. Okay, here we go. X Limited resident Indian company on 1st April 2023 has borrowed rupees 100 crore from MSINC, a company incorporated in US. Is it clear? X have taken borrowing from MSA INC, okay, which is in US, okay, at interest rate of 9% per annum, okay. The loan is repayable over a period of 10 years, for the loan is guaranteed by what I said. This is the second para, second point. Okay, second or first, let's see which point is here. Okay, so repayable over a period of 10 years for a loan is guaranteed by MSM Incorporation. So the guarantee is given by MSM, and we have to find out who is this MSM. Let's take as M, ठीक है, M Limited. Who is this M here? ठीक है, is it the associate enterprise of X, right? Let's find out. Incorporation, okay, incorporation. M is a non-resident whose share carrying 30% of voting power of both. Now M is having 30% of voting power in X and B Limited. Okay, and here comes the thing that M also deposit 100 crore with MSA. Is it clear? Let me rewind it again, which says that M holds 30% of voting power. We were talking about X who have taken loan from MSA, right? Let's say by A Limited, okay? Don't be confused, okay? So M Limited is holding 30% of voting power. Do you remember the condition of associate enterprise? The very first condition was of 26%. If any of the party is holding voting power of 26% of more of equity shareholding of another party, another enterprise. In this case, both of them are going to be associate enterprise. The relationship would be of associate enterprise. Do you remember? Yes, we remember this. So M is holding more than 30% of voting power in X and B, which means this is the case of indirect holding, remember. So they both are, X Limited and B Limited are going to be deemed to be associate enterprise, right? Yes, this part is cleared, as they are holding more than 26% of voting power. Of course, M and Y are also associate enterprise here, and M and B are also associate enterprise here. Okay? Now, which says X Limited have taken loan from A Incorporation. Okay? And M Limited have given guarantee to what? The loan given by A Limited to X Limited. Okay, here in the question which specifies that M and X are associate enterprise, as they are M Limited is holding more than 30% of voting power of equity shareholder in X Limited. Okay, is this part clear? So they are associate enterprise. This is super clear, hope so. Let's go for the next information, other information given in the question, which is saying that the net profit of X Limited is 10 crore after, okay, after debiting the above interest of depreciation 5 crore, depreciation of 5 crore, okay, income tax of 3.4 crore. Calculate the net profit was given, okay, calculate the amount of interest to be allowed under head profit and gain. Let me tell you, okay, don't get confused between what the question is saying. They are asking to calculate the amount of interest to be allowed, okay, and we also have to calculate the amount of disallowance of interest, right? So 30% is going to be EBDIT, excess of 30% is going to be what, right? Yes, disallowed. But what about the remaining? There were also one more thing, that interest paid or payable, whichever is lower, we are going to take it, okay, and the excess is going to be allowed. Okay, so let's go for the question. What is written? Such debt shall be deemed to have been issued by associate enterprise. Yes, interest payable to MA Limited considered for purchase or limitation of interest deduction under section 94B. Let's compute the deduction under section 94B. Interest to A, deduction under provision. Okay, let's go for what was this written earlier in the question. We read that A Limited, okay, A Limited have given loan, have given borrowing of 100 crore, okay, A Limited have given borrowing of 100 crore to whom? X, right, and interest chargeable is at 9% per annum, right, and how we are going to calculate? We have to deduct from 9, which means from interest we have to deduct EBDITA, right? So let's go for this again. Okay, earning before interest, tax, depreciation, amortization, EBITDA. Okay, deduction under provision under section other than section 94B, 100 crore into 9. This was the interest which is actually given in the question itself. Okay, so this is the interest to A, which is paid by A to the party, whoever he have taken the borrowing. Okay, now we have to calculate EBITDA. So we have to again, what EBITDA, earning before interest, tax, depreciation, and amortization is to be add back, right? Why we are doing this? We are doing this because we have to calculate EBITDA. Then we are going to compare it with the interest amount. Then the excess amount, 30% is to be taken in this case. Then the excess amount is compared between them. Okay, let's go for it again. In business income, we have business income of 10 crore, right? That is net profit. Okay, depreciation, interest was, again this was the same interest, we have to add back this. Okay, this part is cleared again. What about the other remaining thing? Interest, income taxes of 3.4 crore. Okay, this is also cleared, and depreciation of 5 crore. Right? Take out a calculator. The total of EBITDA would be 27.40. What I have said that 30% of EBITDA is to be taken. So 30% of EBITDA, which is 27.40, 30% would be 8.22. Okay, which is 8.22. Again, we have to now take out the difference of 30% of EBITDA with interest, actual interest paid or payable. Okay, so the interest paid was of 9 crore rupees. 30% of EBITDA is 8.22 crore. So this amount would be excess amount, right? Excess interest. This interest would be disallowed, right? This interest would be disallowed. But the question have asked me what? The question have asked me, I have to calculate the interest to be allowed under this head, right? So I also have to mention this allowed interest. Is it clear to you guys? Because question all have asked me that I have to give this answer, I have to give them the allowed deduction, which means this definitely, right? So the allowed interest would be 8.22 crore. What about the disallowed under section 94BD? Okay, that would be 0.978 crore rupees. Is this part cleared, guys? 94B. Yes. Okay. So this was the one of the important topic, and definitely question is going to come from this part. Okay. Okay. Let's read out again. Disallowed under section 94B is going to be 0.78. Okay. Disallowance to be carried forward for next year and maximum for 8 years. Is it clear? Yes, this part is clear. So let's go for other two section. Okay. Section 92E, which is a report of CA. Okay. SSC have to file a report to CA in form number 3CEB up to 31st October of assessment year. Okay, and this would be the last final topic of this chapter. We have to find out the penalty payable by the SSC in case of any default done by SSC. Okay, so section 270A. 270A says that if any failure is done, okay, if any failure is done in for reporting of transaction of misreporting of income. Okay, if failure of reporting of transaction is done related to misreporting of income of SSC, in that case penalty of 200% of tax is applied. The SSC have to pay 200% of tax here, right? Under section 270A. Is it clear? Yes. Let's go for the other part. This was 270A, where misreporting of income is done by SSC. If the failure is done in this case, then 200% of tax is to be paid by the SSC. Okay. 270A, let's go for 271AA, where if any SSC, if any of the SSC have failed to maintain and keep, okay, maintain and keep what is this 92D? The information and documents, right? Do you remember this section? Okay, if they have failed to maintain and report under section information and documents under section 92D, in this case, okay, and fail, the penalty would be 2% of transaction value. in these three cases, so let me say it again. In case the SSC have failed to what? Maintain and keep the. So in this case, if the failure is done by SSC to maintain and keep the information documents in as per section 92D, okay, in that case the penalty of 2% of transaction value is to be paid by SSC under section 271AA. Okay, if he fails to report transaction and he fails to maintain and furnish correct information documents, in these two cases again he have to pay the penalty of 2% of transactions value. Is it clear? Let me remind it again. If the SSC fails to maintain and keep the documents and information under section 92D, okay. Second, if he fails to report the transaction. Third, if he fails to maintain, furnish the correct information documents, okay. In these three cases the SSC have to pay the penalty of 2% of transaction value. Is it clear? Under section 271AA. And there is one more point of this same section 271AA, which says if the SSC fails to furnish information document of master file, right, of master file, in this case the penalty would be of 5 lakh rupees. Is this clear? Is this part clear? Yes. Let's go for the next penalty under section 271BA. If the SSC fails to furnish report to CA as per section 92E, the penalty would be of 1 lakh rupees. Okay, and as per section 271G, if the SSC fails again to furnish the information documents, okay. Let me rewind one thing. The same thing was written in the section which we read just before, right? This is saying 271G is saying that the SSC fails to furnish information and documentation under section 92D, right? And the section which we read before was of failure to maintain and keep, right? To maintain and keep under section 271AA, right? And this was of 271G. But what about the penalty? This was of 2% of transaction value, and again the penalty of 271G is also same, which is 2% of transaction value. Okay, so things are easy now to relate, how we are relating everything. So things would be easy if we are able to relate them. Okay, so that's it guys, this was the penalty. So there are 4 penalty. Let's go for it again. Penalty under 270A, misreporting of income. In that case 200% of tax would be paid as penalty by the SSC. Okay, 271AA, maintain, keep, 92D, report transaction, and third again, correct if the information and documents are not correct. In that case again penalty of 2% transaction value. 271AA, okay. Let's relate it to 271G. Same thing. Here what was written? Fail to maintain and keep. Here 271G में लिखा हुआ है, if he fails to maintain, furnished what information document is section 92D. In that case 2% of penalty is to be paid in both the section. Okay. And second thing was if he fails to furnish information document, same, but that is of master file, and the penalty would be up to 5 lakh rupees. Okay. Now section 271BA, failure to furnish the report to C as per 92E. We also have discussed this thing somewhere, right? Okay, so that's it guys. This was your last topic of this chapter, and we are going to start the next part of international transaction from tomorrow onwards. So you have to solve the question of, I'll tell you what, specifically this topic. Okay, there are few questions, okay, and trust me, question would come from this part. So this, mark it as important topic in your book so that we have to revise it first. Okay, so till then we'll meet soon again. Till then, toodles guys, this was Soumya Santosh.